Hello. Welcome to our channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Friday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us. And yesterday, gold was struggling around 1950. Gold almost made a low of around 1944.45. My SL was also hit. Okay, but ultimately we saw that gold flying. Okay, when gold showed extreme upside, when I saw the gold cross 1950 to 53 level, I entered and somehow I could recover the loss. Okay, but overall, our our level worked nicely, and overall this month we have seen that market has been very choppy. So before I begin the video, I would like to request everyone that please be careful this month, because overall we can see that market is not trading near the major levels, and overall the market has been choppy. So as a result, you need to be careful with your stop losses and risk management. Okay, do not use very tight stop loss because there is a problem of SL hunting. You may be a victim. Okay, so don't make the mistake. See, I'm not I was to be honest, see, when I saw that goal was around 1940, 45, 46. Yes, I could have easily uh, shifted my stop loss to 1940 to 43. But to be honest, I prefer to stick to my discipline. I have made many mistakes, plenty of mistakes in the market, and as a result, I do not want to repeat them again. Yes, SL hunting once is better than compromising with the discipline. This is something I follow. I may sound crazy, okay, but this is something I follow personally. Anyways, let's get started. So first of all, my dear friends, the power of contracts we saw yesterday, and ultimately the contracts won 1950 level work, and right now gold is standing at 1960. So you can see that I have drawn many levels here, but keep in mind, not the single level is very reliable. The reliable levels are gone right now. Okay, the levels that we have in front of us are a little bit riskier, so you need to be careful with your risk management. So first of all, let's look at the news. You can see gold set for worst week in over a month on higher dollar and yields. Gold prices were flat on Friday and on track for their worst week in more than a month, weighed down by a stronger US dollar and treasury yields after hawkish remarks from Federal Reserve Chair Jerome Powell. So my dear friends, one good news is that um, the correlation between DXY and gold is slowly coming to track again. We can see that, okay, the beautiful relation between the DXY and gold is slowly working again. And this is the chart of DXY. Okay, and we can see that DXY is right now standing at 105.87. And if you look at the chart carefully, then DXY was in a range for a long time, but right now we can see that DXY is trying to recover. DXY was in a range, the support was around 105.50. It broke it, but you can see that it is entering inside the range again. But entering inside the range is not important here. The two things are very important. First of all, DXY is beautifully respecting our FIBO setup here. So if DXY breaks this level here, where will be the next stop? The next stop will be around 106.25. Okay, and the most important thing here is the gap here. You can see we have a gap here, and market doesn't like gaps, so there's a good chance that DXY will be going upside in the coming days to fill the gap. If DXY fails also by next week, at least it will try after a couple of months, because I have been trading for more than a decade, and especially in stock market we can easily see that market doesn't like gaps. Market fills the gap at one point. So you can see the next stop of DXY is 106.25, and then we have this resistance around 106.60, and once DXY will be heading towards 106.60, it will also fill the gap here. So if DXY will be going higher, there will be pressure on gold, because the correlation is slowly coming to track again. Okay, so let's wait and watch where DXY heads. And if you look at the economic calendar, then today we don't have any major news coming up, and that's a good thing. Now let's look at the chart of gold. First of all, if you observe the market structure here, yes, the market structure is still very much bearish. We can see the sellers are still have the dominance on the chart. Yes, the buyers at this level won, but that doesn't mean that they could change the direction. We still have no confirmation about the trend reversal. We still have no news, no fundamental factors that will completely change the direction of the market, or and technically also we don't have any structural change here. So as a result, no confirmation about the market reversal or the trend reversal. So as a result, we need to go by the trend of the market, and we can still see the trend of the market is still not positive. So my dear friends, during the day, if we see market going up, your first level to look for a sell will be around 1969 to 1971 or 1972. Why? You can see previous resistance around the area as well as FIBO 38.2% retracement level. And then your second resistance to look for sell will be 1977 to 1980. We have 200 moving average, we have FIBO 50% retracement level. So these are the two levels where we can look for sell opportunities. Once you will see market entering the zone, switch to 50 minutes time frame to observe the market behavior. If you see market reversing, showing price rejection from above, you can go for a sell. But my dear friends, as I have already said, that you need to be a little bit careful, because overall in the month, this month we have seen that market has been very choppy. Okay. See, trading on a trending market is easier. Trading on a sideways market or range bound market is easier, because you have the levels. You, for example, in a sideways market, you buy at support, set at resistance. If a market is trending, whenever market comes for retracement, you go for a trade. But in this type of choppy market, okay, there is a high chance of SL hunting. Okay, probably you all have seen that. Okay, your accuracy has gone down. For example, mine. Okay, this month I have faced 3 SL hits. Okay, so you need to be careful. Okay, so these are the two levels. Once you'll see market reversing, then only go for a sell. Confirmation is important. Okay, because we are retail traders, our capital is limited. Do not gamble. On the other hand, if you see market coming down, then my dear friends, if you are a risky scalper, you can look for some buy position around 1950 to 1952. Around 1950 to 1952, we can look for a buy position. You must be thinking why we can look for buy position. Let me show you. See, here I am using FIBO here. More or less I can see the market is respecting Fibonacci. So here we are not considering the FIBO 50% retracement here, because why we are not considering? Please try to learn. Because the market is right now consolidating. Okay, so if market drops after consolidation, volatility will be high, and if the volatility is high, then obviously market will break FIBO 50% retracement level. As a result, I'm considering the 1950 to 52, which is FIBO 61.8% retracement level. If, and moreover, the level was also acting as support previously, so we can expect the same again. So if you see market taking support, market showing price rejection from below around 1950-51, you can look for a buy position. How much you can expect? If the bounce is good, you can expect around 30 to 40 pips. Keep in mind, this is not a proper level. Okay. And then we have the yesterday's low of 1944.45 as well. But to be honest, I am not very hopeful with 1944.45 as support, because if we observe the structure of the market here, we can clearly see market has been forming lower lows. Okay, and formation of lower lows indicate the market structure is weak. So if this is the market structure, then in the next drop, okay, market will break 1944, isn't it? So that's why I'm not convinced much with the level of 1944.45. Time will speak. During the day, if you see market going down but there's not much volatility, then you can expect the market to take support. Because see, to break a level, probably you have heard me saying plenty of time, to break a level, volume is extremely important. If volume is missing, then you can expect. For example, on the chart of Euro USD, market took support. Okay, market took support in this level. Okay, but you can see the buyers do not have the strength to take the market up. Okay, similarly, you can observe the market around this area. If you see market coming down with low volatility, if market takes support, you can look for a buy as well. But Yesterday, as we discussed, the next support on the chart of gold will be around 1930 to 1934. And as the market has been very choppy, market may also move towards 1925 as well. Okay, why? Let me show you. Remember the option chain data that helped us? Okay, so we are back to option chain data, and yet you can see we still have got a good number of contracts at 1950, which has been working as support. Okay, but we can also see that at 1925, okay, we have good number of open interest building up. So if this level is gone, the market will be heading towards 1925 level. Okay, because we have a good open interest. Technically, we have support at 1930 level. So this will be working as a big zone in the market, and we will go mad. Anyway, right now let's focus on the present portion of the market here. So if you already have a buy position, sell position, be on the trade, because still we don't have any clarity about the next direction. Okay, overall the structure of the market is still bearish. There is no doubt about it. But in the during the day, if you see market taking support temporarily, not permanently, temporarily around 1950-51 level, or market going for temporary bounce, you can go for a buy. Similarly, 1944-45 is not a support, but still it was a previous swing low. If the volatility is low, then from there also we can expect a temporary bounce. Keep in mind, temporary bounce only. Okay. On the other hand, we have also selling opportunities around 1969, 1971. Then we have also second selling opportunity around 1977 to 1980. So these are the trading opportunities in front of us on the chart of gold right now. No major levels, so be careful. Market has been choppy. Use a bigger stop loss. Tight stop losses of 10 to 15 pips will get hit easily. Okay, be careful. Do not gamble. Let's meet tomorrow. This is my analysis. Use your own analysis and proper risk management. Do not gamble. Okay, bye bye. Take care. See you tomorrow.